Hey, greetings, Dr. Jeffrey Scott. This is my weekend market update. This is going to probably be a little rough. I'm sitting in my hotel room in Germany. The internet isn't great. And to put it mildly, I'm kind of tired with all the things going on here. Um, I still have a healthcare presence, and we do a lot of research with my company, and we have a couple of papers we're presenting here. So that's why I get to come for work. Not a bad deal. Um, Question this week is, will strong earnings and improving seasonality save the U.S. markets? It was not a bad week last week, but boy, it's still indecision. And I can see things to argue why we're going up, why we might be going down. And because of that, be honest, I've got more cash now than I had when I started the year with all my investments into this account. I still have plenty of open option and stock positions, but I raised a lot of cash, tightened stops. Um, I don't think we've got a Monday disaster coming unless something happens on the news front. Um, I just don't know what's going to happen here. And we are getting into the best part of the year for the markets, so you expect them to go higher. And we do have earnings, which last time around helped the market. So my guess is we go higher, but I do think there's indecision. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group Top Down Trader, and website marketmripro.com. This is for educational purposes only. Anything I should talk about should be taken in the spirit of education and not investment advice. The intent of the video is to show you how to use my tools for top-down trading, top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I'm a owner, intend to buy or sell any stock mentioned in this report. Trading stocks and options should always be considered risky. And as you know, I've got tools in many platforms. If you're looking for the wealth charts video, I just recorded it, but I don't control posting it, so it won't be up until Monday morning. My Google group's called Top Down Trader. Just go to Google Groups, sign in, go to all groups, look for Top Down Trader. Let me know how you want to be contacted. It's the best way to reach me. It's also the best way for me to reach you, to share videos and invite you to members only programs. My Palm Beach Garden meetings pretty much at the point of no return from a live perspective. If you reach out to me in the next 24, 48 hours and you want to come live, I'll find a spot for you. But for the most part, it's online only now. It's Marriott Palm Beach Gardens, 2 packed days of education and software instruction. You don't need to have any of my tools to get value out of the program. It's 12.50. I'll feed you. I'll water you. I'll make sure you have plenty of coffee to stay awake. And if you really want great education, I'm not sure if they have positions available, but John Person has his seminar Friday and Saturday. I have mine Sunday and Monday intentionally. And from that 12.50, you'll get a $400 rebate towards something. If you don't have my software, you can buy my software. If you want to come to my meeting next year, it'll pay for your meetings next year. So something to consider. Just let me know at marketmripro@gmail.com. I always look at, I just type in Fred on the search box and it pops up all kinds of things. And I'm looking for 4 things each weekend, maybe a few others here and there. I'm looking at the yield curve. And when the yield curve inverts, it gets below the zero line. 10 minus 3 months here, 10 minus 2 months here, 2 years here. And every time it gets below the zero line, you get this gray bar. That gray bar is a recession. It occurs a variable amount of time after you cross back over the black line. Well, guys, we have a scenario here that suggests that we have a recession coming. It just doesn't tell you when. But I don't expect one this week. The market, we still got a strong economy, and the Fed is cutting, and maybe that'll prevent one. But both of these have crossed back above, both of which are at a point now where you start to wonder, do we have a recession? Now, in a recession, here's 2008, here's 2020, you expect to see a spike in credit tightness. And I look at the BOA, U.S. high yield income options adjusted spread for that. We're not seeing any evidence of that. And then if you look at the general diffusion, we got some of that this week on October 16th. We are back negative, but you usually don't get recessions unless you're below minus 20, and we're not below minus 20. From a news and earnings, I think this is pivotal. We've had so little data that the government is going to get us a CPI on Friday. And I think that's going to be incredibly important because if it comes in surprisingly hot, it will take away some of the belief of rate cuts and could crater the market. If, on the other hand, that data print comes in light, it could get us talking about 50 basis points and drive the market higher. We got some Fed speakers, some jobless claims, which we may or may not get. The ones in red we probably don't get. We know we're getting the CPI and the PMI because they've already told us that. The other thing on the right, it's a massive earnings week. It is a judgment call to hold stocks over earnings date. It is bad judgment to not know when your stock's earnings date is scheduled. So for more information about anything I talk about, anything about me, my trading, my results, just reach out to me at marketmripro@gmail.com. And if you have the program and you're having any issues with it, um, installation or any other part, you can always either email me or reach out to Praveen at coding@marketmripro.com. On to the charts. So I like to start here and we'll look at a number of things, but you could see on Friday, it was a positive day. Q's up 0.66, Spiders up 0.57, Diamonds 0.48, and then the Russell was the only thing down at 0.66. Most of these were above the midline of their daily range. The US dollar up, ETF was up 0.11, Bitcoin was down another 1.5%, and volatility was down 7.5%. If we look at the week, you could see Q's and Russell were both up about 2.4%, Spider 1.75, Diamonds 1.52, and Bitcoin was down almost 9%. It was a very good week for the bulls. If Interestingly, we'll see things that don't look great. If we look at the NYSE and the NASDAQ, look at how the new highs have come down hard, so much so that we're now negative at the 52-week new highs minus new lows. That's bothersome. Now, if you want to see positive, look at the number of sectors up in the S&P 1500 on Friday versus down. Industry groups up versus down. 62% of the stocks up. On the NASDAQ, not so good. Less positive here on the sectors and industry groups. And look at that, only 37% of the stocks up despite the Qs leading. That means the broader was probably lagging. And on the NYSE, 50-50, 53% were up. So a mixed picture here, not all wine and roses. If we look at the S&P 500 sectors and we look to see what the leadership was on Friday, staples, discretionary energy, interestingly, financials bounced, healthcare, and where was the weakness? Utilities, materials. So, a lot of things, everything was up on Friday. And actually, not everything because materials, utilities were down. On the week, everything was up. And on the week, it was led by real estate, discretionary, tech. And whenever you see tech and staples running together, it always makes me feel weird. If we look at the themes on Friday, we could see Asia, home construction, so they think rates are going down, millennials, NASDAQ 100 covered calls, cybersecurity, fintech, Norway, discretionary, Dow Jones Internet, oil exploration. All right, so let's take a look at the timing model. On the weekly model, you just have to look down here to see that we're in a buy on the spiders, the Qs, the diamonds, and the Russell, and one should not be surprised by that. However, if I look at the daily model, it may take a little bit to pull that up. You can see on the daily timing that um, we're still red, meaning in a sell signal across the board on the daily ETFs. So if the weekly is long and the dailies are short, it's caution. It doesn't mean sell everything. It doesn't mean go short. It means be careful. So I closed, it was options expiration on Friday, even though the volume wasn't higher than normal. And frankly, I closed a bunch of my options positions instead of rolling them. Why? Because I keep sharing with you my performance and I'm a little nervous about the market here. And I'd like to maintain the gains I've got so far. And the other reason is because I'm a little mixed on where I think we're going. So daily tells me be careful. Weekly says it's okay to be long. The guppy charts tell me that we're still in a bullish position. And when we start to look at the daily indexes, that's what I want to look at right now. Here is the spider, beautiful uptrend. Notice that it has frequent little pullbacks. This was a bigger one in April. But boy, multi-years, this is a beautiful chart. That's a weekly chart. So let's go back to the daily here and we'll focus on what we're dealing with now. And so a big move off the bottom. And this was a kind of an inside bar week in that everything was captured between the highs and the lows of that bar from last week on Friday. So to me, if we stay within this, it's great. That's consolidating. That's chop. I'm not sure I want to buy buying a lot. Um, but boy, a break above or break below is going to give me a signal. So I'm waiting for that. If I look at you're going to see that same pattern everywhere, by the way. If we look at the Qs, you could actually do the exact same thing and say, man, look, we had lows there, somewhere about that. And notice it's a place that we've touched several times. Highs up here at all-time high land. And now we're just consolidating. I think chopping is good before your next leg up from a perspective of the market catching its breath. It's not good for your portfolio. I'm looking for a breaker above below before I start to commit a lot of my funds. Not to say I won't be trading it, but I probably will continue to have a lot of cash on the side. Here is the diamonds, the same thing, a lot of nice run up. And again, it's flirting with the 50 here. So this is the bottom of the range. I'm going to just look at this bar here and say the top of the range. And we're consolidating as well, but you've got the 50 and this line here as potential support. One would hope to see that this market actually will move and go higher. Let us shut that. If we look at the Russell, again, this has been a leader and actually set an all-time high on Wednesday and then pulled back. This one looks different. Still in a nice uptrend. It's got a nice channel heading up. To another one. Somewhere in there. And it's closer to the bottom. So the Russell looks different, but they're all sort of consolidating here right off of recent highs. VIX early in the week, VIX went up. You could see it moved up nicely. Friday was a reversal. Friday, the VIX was down 17%. Maybe that means it's time to buy, but I don't know if I'm ready yet. And we're still elevated over where we typically rest at. And then lastly, the dollar, which had been had been behaving, ran up here and failed at the 200, is sort of stuck between the 200 and the 17 and not an issue. And notice the dollar is well off its highs. Talk about off their highs. We finally saw a pullback in gold and silver. Now, is this the end of the gold run? I doubt it, but it was down 1.88. Silver was down more, 4.50. They both had fantastic runs to all-time highs. Silver taking out the Hunt Brothers 2011 high, so that's a pretty significant happening right there. But the market's holding up here pretty well. If we look at oil, not holding up, well below the 50 with a death cross coming in and below the 200. Same with natural gas. And if we look at the 10-year and the 30-year, they both were up a bit, 0.73 and 0.35 on Friday, but really well off their prior concerning areas up here and in downtrends, which should be favorable to the market. The buckets show more stocks to the left than the right, but nothing is in I'm at a reversal signal area, so it shows weakness, but not so weak that you'd expect a bounce. Market breadth, and this is kind of the thing that has me concerned, is if we look at the NYSE composite on the left, the NASDAQ on the right, we are definitely in a downtrend here. It could just be a short term, well off the highs. If we get down here and have lower lows, we're probably in trouble, but we definitely have higher highs and short-term lower lows. We have lower highs and lower lows. More consolidating pattern as well on the NASDAQ. What has me bothered was these, in the last 7 days, we've had 5 Hindenburg Omen signals, and that's a sign of a market that's at risk of rolling over. So that's partly why I raised cash and instead of rolling some of my options, took the profits. There's no tax issues. I'm going to pay taxes anyways on them short term. So rather not roll them, take the taxes. You can see new high, new lows were negative. The AD lines were negative on the NYSE, positive, excuse me, negative on the NASDAQ, positive on the NYSE. Up down volume was there. Just very concerning. Now let's go look at the JAS layout and take a look at what we see. Um, if we go, you can see there's 3,861 stocks made my filter, and the filter is looking at NYSE, NASDAQ, and Amex, a dollar and 100,000 shares. Let's go into the top-down view and take a look at what's working for the sectors. Now, this is different than the S&P sectors because it includes all those 3,800 stocks. And I rather look at the two-day momentum as a ranker. Healthcare, staples, and discretionary. Let's look at the two-day here and see what's the top ones: travel, education, agriculture, residential. Not exactly a growth type of a picture here. 183 stocks. Let's come in here and let's reduce them to nothing below five, above five. Nothing below five or below 500,000 shares gets me down to a manageable number of 90. So let's just talk about top down. We decided to be cautious. So I'm not going in and buying everything I see. I raise cash because I think the market's risky. However, I'm going to respond to what the market does at 9:30, 10:30 in the morning on Monday. So I want to be prepared with what I think might be working. So at least on Friday, these were the three sectors that were leading. Three of them. These are the 10 industry group in the top three sectors, and these are the 90 stocks. So let's just rank these by two-day momentum and just take a look at a couple of them. Things are not always fast using internet in foreign countries. So this is Cigna, well off the bottom. I think you're going to see a similar pattern on several of these. Failed the 200, now looking like it wants to make another charge. To me, there's too much risk in these with the Medicare Advantage um, concerns, but you could see seasonality is improving. Would not be my favorite. Tesla, well, you know what? Interesting place to be consolidating um, right before earnings. Now, it's not extended. It's in a squeeze, relative strength breaking out. This one kind of looks interesting, doesn't it? Now, what happened to my OBV? Let's put the OBV back. So I know what happened to the OBV. I killed it by mistake. Kill that one. So I want to put the OBV back. So I'm going to go here. I'm going to find it here. And that should bring my, there you go. So OBV and is just crossing over, as is the relative strength. I like that. As I said, it's only at 59 on the high jump. A consolidation, CPR, momentum, and a John Person buy. That looks very interesting, but earnings are just around the corner. You want to know how I know? Because if I flip this, it tells me it's expecting 53 cents on 1022, which is down from what it was a year ago. So Humana will look a lot like Cigna. Again, I apologize for the speed issues, but I am not having great internet here. Again, below the 50, sell off, failed breakout, pull back to the 200. Looks like it's getting ready to run again. Maybe it's the right thing. I mean, I am playing one of these. I'm playing CVS Aetna, and let's just show you that I think it looks significantly different. It's right down here. Nice, beautiful uptrend, and that's the one that I've been in for a while. Um, Very different pattern. They have Aetna, but they also have the drugstores. SKY, Champion Homes, We said the home builders were strong. We looked at Bungie last week, a fertilizer play, big move here. Um, McKesson, one of my favorite stocks in bad markets. Operating machine, there's three of them in the sector. One is McKesson, which looks good here. Cencora, COR, and Cardinal Health are all stocks that you expect to outperform in a bad market. Why am I raise cash? Because I think the market may be tough here. What is supporting that? The fact that McKesson, Cardinal, and ABC all came to the top of my list there. Cardinal looks really good here as well. Lennar is another home builder. We know that they were strong, and this is moving up as well, but it's still below the 50. Race is Ferrari, I believe, and kind of sideways. I don't know what they did in the F1 this week. And you could go down that list and take a look at others. Molina is another healthcare stock, mostly a managed Medicare and Medicaid, and it's just so far off of its prior highs. So clearly you can do top-down analysis, and if I had to pick from this, if I had to buy something new, it'd probably be McKesson or Tesla with all the concerns about earnings or acknowledging earnings. The other thing I like to do is to do bottoms up, and I'm not going deep tonight because, hey, internet's bad. I'm working over here, and my wife will kill me if I talk much longer. Um, I'm not kidding. She has no patience for these videos. And last thing I would want to do is upset the hand that literally feeds me. Impulse. This is where those 3,800 stocks are. Let's just look at my favorite two scans. A plus scan. You're not going to see a lot here. Hologic. This one looks interesting. So here's a stock that's well off the highs, ran up, retested the 200, and look what it's doing here. It's breaking out, good volume, two momentums in a row, relative strength and OBV breaking out, good seasonality. Let's look at when earnings are coming. Make sure that that's not going to trip us up. All right, where is the earnings thing? Not it. It's hiding. I give up. Here's the news. But the earnings thing disappeared on me. Um, well, that's Hologics, and I got to figure out why I lost my did I do something? I have a tendency of screwing things up and hitting things too many times. But the earnings things is supposed to be right there. All right, let's see what pops up on the next stock. So Hologics looks really good to me here as well. Another thing I like to do is to go in here and look at the single A. This is look for pullbacks and uptrends where the relative strength and OBV looks good, and all of them are going to look at $3, $5 and 500,000 shares. So AL, Air Lease looks like a takeout. ARTV, a biotech, I'd want to find out more about it. Yeah, I must have, well, maybe Germany doesn't like to let through my earning signals. Um, Big gap up here. I'd have to look at the news. The news is prioritization, lead therapy, positive data. Well, that might be something to read through and maybe look at chasing that gap. CREV, don't know anything about it. Carbon Revolution, Public, Limited, Ordinary. I'd have to go read about it, but was this an IPO and this is old stuff? Looks weird, doesn't it? Nothing, and then a big gap up on massive volume with all of our signals firing. Hologics, which I like, still like. Where I looked at it, Pump is a oil services play, and these things have been beaten up. So you're buying something that's come up off the bottom below the 200, which is not my favorite. SPAI, Safe Pro Group Inc. common stock. Don't know anything about it, but I love the pattern. Run up here, pull back, and breaking out here on big volume. I wish my earnings thing was showing up, but we got volume, breakout momentum out of a squeeze. Look at relative strength and OBV. That one looks really good, SPAI. And then VHC. Burnett, Tech Play. I don't like the topping tail. So Hologics would be my favorite. I think McKesson, Cardinal, and Cencora look interesting. And then if I was more speculative, I might be looking at something like um, that SPAI. So again, let me just emphasize, I am cautious. I am not advocating you go out and buy. I think we could still have some bumps to go into the end of the month. And the other thing is check your earnings dates. And typically this thing will light up. I'm actually using the staging version. That might be the problem. For whatever reason, my live version was not getting the latest day's quotes. They're working fine here, so I'm waiting for Praveen to wake up in the Pacific Coast. We'll get that addressed. But be careful. We're not out of the woods. And I don't think there's anything wrong with sitting back and saying, I break above that recent high on the spider and I want to be long. I break below, I want to be short. And if I go sideways, I want to be sitting on my hands. That's how I feel. Love to hear what you think. Have a great week. Probably no video Monday night. Um, and I'll be back live with a video Tuesday. I'll be in New York. Take care, everybody.